Welcome everyone to JLL podcast. My name is Yulia and I'm head of Research Consultancy at JLL Malaysia. And today I'm privileged to moderate a discussion of our two market leaders and very well-known experts of the market. So today we will discuss the 2026 market outlook and what we may expect in terms of real estate market performance in Southeast Asia and specifically in Malaysia. And we will also discuss the macroeconomic trends as well as real estate market trends. So I'm very honored to be joined by our two leaders, Dr. Chua, who leads our Southeast Asia research team, and also Jimmy Tam, Managing Director of JLL Malaysia. Thank you both for taking the time and joining me for today's discussion.
Thank you for inviting.
And my first question will be to Dr. Chua. Please the big picture and trends that will be affecting the Southeast Asia market. Can you describe the current market sentiment about Southeast Asia and what will be the general investors and marketplace?
Right. Well, right now, if you look at the general business mood and investors' mood and businesses, it's generally very positive compared to, say, 6 months ago. And there's a fundamental rationale behind it. If you look at it, there are two broad trends that's happening right now, internal and external, that I describe it. Internally, we look at Southeast Asia, ASEAN as a whole. There are two very broad demographic trends that's happening. We have 50% of the ASEAN countries are below the global average age of 30.2 years. So we have a very young, dynamic population that's up and coming and rising. This is what we call the demographic dividend that's going to push consumption. The other one, of course, is a shift towards middle incomers. According to the ASEAN Secretariat, the projection is there will be a growth of about 70% of the population by 2030 of middle incomers. So that's going to drive the consumption for everything, real estate, consumer goods, and whatnot. On the external trend, we have very strong policy shifts recently, right? We look at the agreement between the US and some of the ASEAN countries. They've come to consensus in terms of the tariff restrictions. It's been reduced. So that provides a kind of lift or a driver for exports here in ASEAN. And of course, the other one is within ASEAN itself, we noticed that the intra-regional FDIs continues to grow, suggesting that the region as an economic bloc is maturing. At the same time, it's definitely looking at more self-sufficient in that way.
Very interesting. Looking ahead, which property sectors you think will be expected to shine in the coming years in Southeast Asia specifically?
Well, that has been distilled through looking at a few key trends that's happening. And I kind of categorize them with three broad ones. We have first the supply chain diversification that we are seeing as one broad trend. There's this technological adoption that's happening at the same time, and also very proactive policy support and shifting preferences that is happening. So these three broad trends are going to drive some of the real estate development in there. Let me dive that in more details. So the very first one, the supply chain diversification that we hear about, essentially is that China plus one, China plus many trends that we are seeing. Who is benefiting from that? Naturally, industrial and logistics sector is benefiting. So markets like Greater Jakarta have seen tightening of the vacancies in their market due to very strong demand support. Likewise, here in Malaysia, industrialists and businesses are looking at IPOs as well. And Vietnam has shifted in terms of its connectivities, port connectivities, that is, measures this port connectivity with the global trade, has moved up this trend to join the rest of the other two ASEAN markets, Singapore and Malaysia, as one of the top ranking in the world. The other, of course, a trend is the tech adoption. Technology adoption is ongoing. I think we heard a lot about the digitalization as well as the AI adoption. Both trends are going on at the same time. I think the digitalization that we are seeing is not just in the private sector, but the public market as well, and the AI adoption. Now, both trends are being driven fundamentally. So we're looking at between 20 to 40% of new investments coming is expected for AI investments in ASEAN alone. The digitalization, especially in the public services sectors, there's a lot of push for government services to be online that's driving a lot of that demand for data centers. And we are seeing that happening across, in the case of Singapore, the Jurong Island has been earmarked as part of an area for sustainable data centers development as well as research. And we have in Indonesia, new SEZ, Special Economic Zones, are being identified to support the data centers development. Last but not least, the policy shift. There's quite proactive policy shift by the governments and the shifting preferences. Here, the demand is a little bit more nuances in terms of the asset enhancement you are seeing. For example, in the case of Metro Manila, about 2/3 of their assets are graded Bs and below, and yet they are not sustainable in terms of what market demand. MNCs are looking for sustainable assets. Likewise, in Thailand, we are seeing there's a flight to quality, and that's been creating a brown discount to the aging assets. All these trends are providing a strong business case for asset repositioning and improvements.
Thank you very much. This is really insightful. And just in addition to that, what are some key trends that our audience should be keeping an eye on? Any emerging patterns, any emerging trends that might surprise people?
Right. So aside from just the broad numbers that we keep seeing in the economic reports and whatnot, there are some broad trends that kind of keep me awake at night. I mean, in a good way, right? So again, similar to what I've observed in terms of the real estate demand, is this trend of the proactive economic positioning that governments are taking. There's a technological leapfrogging that we are seeing, and the deepening of the regional connectivities. Let me again deep dive in each one. The proactive economic positioning we are seeing for the first time. ASEAN markets, governments are coming together, putting forth very strong economic policy stance in their markets. For example, the Philippines amended its Investors Lease Act to increase its land leases to 99 years. Now, this provides a significant move that will attract long-term capital into the market. In Indonesia, there is this new sovereign wealth fund that's been set up. It's a Dana Tara, and that's driving a lot of investments into key sectors like the renewable energy. And Vietnam is undertaking very strong reformative restructuring to achieve its targets to achieve high income status by 2045. So you're looking at 20 years' time. And alongside, they're positioning themselves to develop new international financial centers as well as transport-oriented developments. Now, the second trend that also kind of keeps me awake while watching it carefully is, of course, the technological leapfrogging. I mentioned earlier, there's a lot of emphasis on that, the AI adoption, right? So all these trends that's happening in there, it's supported by a larger policies that's happening. For example, the EV, the electric vehicles adoption here in ASEAN is touted to grow at a breakneck speed of 30% annually until 2030 to achieve a market size about USD 18.6 million. That's going to be huge. And this is just not about consumption, but it's for supporting infrastructure behind it, right? You're talking about advanced factories, you're talking about the battery supply infrastructure that's needed. And on top of that, you still got the AI that's happening, or the data centers. The interesting thing about data centers here in Asia, the investment is that we are still in its infancy stage, where there's a lot of it is the build-up of the infrastructure, data centers, the energies, and whatnot, and infrastructure support, all that. That's going to drive a lot of changes to come. And finally, of course, it's our regional connectivities. And here I'm not talking about just the connectivities alone. In greater here, the transportation connectivities is improved a lot. And we are talking about regional as well, between Singapore and Malaysia, the JSSEZ, and then regionally, places like Vietnam, Singapore, and Malaysia. The ports have definitely risen to be among the busiest, among the well-connected globally. And talking about it, this is 3 out of 6 ASEAN cities already up there.
Very interesting. A lot of insights into Southeast Asia market performance. But now let's just move to Malaysia. And my next question would be to Jamie. Focusing on Malaysia specifically, which property sectors do you think will outperform others in the coming year? And what would be behind these trends?
Well, I think the outperformers in 2025 will continue to perform well in 2026 and beyond. And then we are talking about the industrial and logistics, as well as the data center segment. So why industrial and logistics? If we look at the market, we are seeing a huge growth in this segment. Just a few weeks ago, there was this transaction, the biggest transaction that ever happened in Penang for industrial asset, which is the Axis REIT acquisition of the Anju Steel's site. That was at the price of Ringgit Malaysia 800 million. Yeah, so to put it into perspective, the entire transaction for the industrial market in Penang for the first half of 2025 was only 866 million ringgit. So that transaction alone, actually, it's almost equivalent to all those transactions that happened in the first half of 2025. So we do see a lot of interest in the industrial space, and specifically in Penang, the focus would be a lot towards the high spec manufacturing facilities, as well as the logistics warehouse that has state-of-the-art technology and services such as ASRS, automated storage and retrieval system, as well as the cold chain technology. And looking at the pipeline, right, if you look at that, it's being published by MIDA, you will see that Malaysia has got an approved investment totaling up to 285 billion for Q3 2025. So there's a huge pipeline coming, and with these approved investments, obviously there's going to be economic activities for the future. Yeah, and that would be a great foundation for the industrial markets as well as the logistics market moving towards 2026 and beyond. And yeah, let's talk about data centers as well. I touched on data centers, and as rightly pointed out by Dr. Chua, huge growth in compute demand because of AI. And with the onset of agentic AI, the demand is going to be even greater compared to generative AI, which we are at this stage right now. So according to analysts, the growth of the data center would probably reach about 4 gigawatt, 2026 and beyond. Compared to now, we are only having about 835 megawatt in operational and planned DC capacity. So huge runway, yeah, a huge potential for growth for the data center market. And I think that's also very important to point out the segment of healthcare as well as education. Although it's less talked about, this is actually an up and coming and emerging market. Sorry, I mean healthcare and wellness, not healthcare and education. So if you look at the region of Southeast Asia, including Malaysia, we have an aging population. We have a rising middle income group, as well as and chronic illnesses. So these will actually demand for healthcare a lot more. Yeah, if you see the trend for medical tourism, you can see that actually a lot of people from places like the Middle East, Vietnam, they are coming to Malaysia for things like health screening, as well as to do some minor surgical procedures. So Malaysia is actually very well known for its medical tourism. And tapping on to the Visit Malaysia that's coming on in 2026, I think the room for growth is even bigger in 2026 and in the coming years.
Thank you, Jamie. Very insightful. Can we go further and can you probably explore a little bit more about which states will be the hottest markets or which states might be in emerging markets? What kind of properties investors should be looking at in those locations?
Yeah, I think the star performing state right now is still Johor. Yeah. I mean, everybody knows, yeah, it's quite obvious. But if you look at the numbers, it actually reinforces what I said earlier, that the Johor is actually outperforming all the other states. If you look at we're looking at the approved investments, right? At the Q3 2025, Johor has actually got an approved investment of 91 billion ringgit. And so compare that to last year was only 18 billion ringgit. So there's a huge jump in terms of approved investments. And if you look at the ranking for Johor among the 5 major states, it's jumped up from 5th ranking to the top ranking state. We're talking about KL, Selangor, Kedah, and Penang. Yeah. So Johor is now number 1. right? So it's all because of all these investments that's being poured into the state. We are talking about areas where there is connectivity and areas where there are TODs. We are seeing a lot of investments coming into new projects. And this has actually pushed up land prices, not only for greenfield sites, but also for brownfield sites. And in terms of the sectors, I would say even industrial segment, if you look at the prices of industrial lands in Johor from 2022 until 2025, we saw an increment of 40%. So that's a huge jump since 2022. So this growth is partly driven by the demand for data centers, as well as the JSSEZ, and of course, the entire industrial ecosystem of Johor.
Okay, thank you. You mentioned previously about Penang transaction, which is, I think it's really setting the new record for the market. In terms of coming investor activity, what do you think? What is your opinion? Do you think that we will continue to see money being invested into development and new construction projects, or we will also see investors focusing on standing assets?
Well, capital is flowing into new developments. We are seeing a lot of that happening across all the major cities, KL, Selangor, Johor, Penang. But at the same time, we are also seeing institutional investors not only focusing on income-producing assets, but also for long-term potentialities. A good example is what I mentioned just now, the exit rate, yeah? So exit rate, the purchase the site was actually getting a yield of about 6.2% for the first 8 years. Yeah, so that's pretty good yield. But I think when Axis pivoted to this asset, they are looking more towards the long-term growth potential in redeveloping the asset for higher usage. So we do see a shift in the trend. Yeah, REIT players are not just looking at income streams; they're also looking for future potentialities.
Thank you. And of course, I think a lot of questions would be about residential. So can we discuss residential in more detail? So in your opinion, what would be the future market dynamics for residential? Because in the previous few years, we saw the market has been quite on a growing stage. But do you expect the residential market to continue this performance, or do you see any headwinds that might impact this segment?
Yes, that's a good question, because residential is in fact a very important market, as it comprises more than 60% of the total property transactions in the real estate market. So anything that moves in the residential market would impact the entire real estate market and, of course, the entire economy as well. So looking at the trends, in fact, we've looked at the performance of Johor. We noticed that for service apartments in Q3 2025, there was a huge jump, appreciation of 20.8%. So this is unheard of. Yeah, typically we are only looking at appreciations of single-digit percentages across all the other cities like Selangor, Penang, Johor, Penang, and KL. But we are seeing this exceptional performance in Johor of 20.8% for service apartments. And when we talk about landed housing, such as double-story terrace houses, which are the most common type of landed houses, we are looking at the appreciation of 10.2%, which is also very, very high for landed housing and double-story terrace houses. And nothing what we see, which are single-digit growth for all the other cities. So we do see a huge potential and a huge growth, and there is room for growth even further. Because if you look at the Johor market, they are actually starting at a very low base, compared to places like Penang and KL. Even now, we are seeing developers asking prices for apartments, especially in the prime TOD areas, at about 1,000 ringgit per square foot and above. Yeah, we don't see that happening a few years back, where it was only about averaging 600 to 700 ringgit per square foot. So this is a spectacular performance for Johor. But I think as the market matures, things will start to cool down. Yeah, things will start to cool down and it will revert back to single-digit growth. So this is just a temporary exceptional performance, but moving forward, as the market begins to mature, like what we see in Penang, in Selangor, in KL, we revert back to a more sustained growth and more realistic appreciations.
Okay, thank you. And since you mentioned Johor and Johor residential market performance, let's now move to Johor-Singapore Special Economic Zone. Since its announcement, which happened 12 months ago, Jamie, can you elaborate a little bit more about, if you compare Johor market performance at the beginning of 2025 and now, what are the major differences that you see, major trends that are affecting the market?
Yeah, I think the Johor market as well as JSSEZ is well on their way to achieve its growth targets. Like I mentioned earlier, in terms of approved investments, it's gone from 18 billion ringgit to 91 billion ringgit. That is exceptional performance for that area. The focus, I think, moving forward would be a lot on the TOD locations like Kichaga, where there is a lot of investments in infrastructural developments. So I think that would attract most of the attention.
Okay. And looking ahead to 2026, what do you see the dominant theme shaping the Johor property market? And which major infrastructure projects do you think will be the real game changer in the coming year?
Yeah, when we talk about the JSSEZ, I think we need to be very honest here. What is actually driving the JSSEZ and the Johor market right now? I think the thing that is really driving it is the cost proposition. Yeah. But actually, if you look at the other special economic zones, it's actually a natural progression for an economic zone. Take, for example, Shenzhen. It started off as a low-cost manufacturing hub, but now over the years, it's developed to become a center of innovation and a center of advanced manufacturing. So it's common for SEZs to go through these sort of phases, starting with providing a cost proposition, moving on to a more high-tech proposition. So the recurring theme is that markets such as logistic markets, industrial markets are there to support the incoming investments that's coming into the JSSEZ, the advanced manufacturing that's coming in. The logistics are there to support that. To support the value chain as well. We have the manufacturing facilities, the cold chain technology, the ASRS. All these are the backbone, and all these are supporting technologies to support what is coming into the market. That is why I pointed out as well, the dominant theme will be a lot more focused on all these residential, commercial, as well as hospitality segments that are located within the TOD locations, as well as the surrounding locations where there is connectivity to the RTS.
Thank you, Jamie. And since we are now very happy to have our special guest, Dr. Chua, can we look at from the Singaporean perspective? So how Singaporean investors are viewing the Johor-Singapore Special Economic Zone? So what kind of opportunities they see there?
Certainly, Yulia. So as Jamie mentioned, the proposition is about cost. I think from the Singaporean businesses and investors' perspective, the JSSEZ, they look at it as quite positively as an opportunity for businesses to grow, and also not just for existing businesses, but new businesses to expand into the region. And it's because it provides a very clear pathway, especially for businesses that are facing challenges, operational challenges like cost, and lack of supply of land in the case of very constrained land in Singapore, right? It offers a very clear pathway for them to grow into the businesses here. So existing businesses are looking at that as an opportunity for them to set up new businesses or relocate, especially in terms of land-intensive logistics demands in there. From the investor's perspective, when this region is stabilized in terms of policy implementation and whatnot is stabilized, it offers a much larger investment environment for these investors to come into play. I think overall, in a nutshell, they look at this as a potential opportunity, especially if policies are implemented correctly and in the right phase and right timing. I think it offers not just for Singapore and Malaysia, but as a region as a whole, a new economic corridor that could define and redefine the whole economic growth for ASEAN.
Thank you. You mentioned policies and that the actual policies would be very important for the implementation. We know that Malaysian government is expected to publish the blueprint for the Johor-Singapore Special Economic Zone in Q1 2026. So from Singaporean side, what kind of policies, key policies, features and incentives would investors expect?
I think the key is, in this case, this is one of the rare economic zones where it involves two countries. And here we are talking about the flow of not just capital and goods and services, but also people. And so it's fundamental in there that policies, infrastructure has to improve to reach a certain level of capacity to allow the free flow of labor and capital, or the smooth flow of labor as well. And the other, of course, from the operational point of view, it's always anxiety. When you move to a new business location, whatever it is, it's the operational efficiencies and reliability of it. And I think having some kind of governance support or incentives to provide some kind of cushion to allow the businesses to then take on that risk. I think these are the two fundamentals that is probably welcomed by businesses if you want to look at this JSSEZ.
Okay, thank you. This wraps up our discussion. Thank you, Jamie. Thank you, Dr. Cho, for your insights.
Thanks, Yulia.